Gautam Chowcharia, head of India Research with UBS, joins us live from his Mumbai office. Gautam, good morning. Thank you for joining us. Gautam, you should be smiling. Nifty is up 2%.
Good morning. Yes, I think this is obviously a positive for Indian market. So yes, all of us are smiling.
But what are you doing about it?
So we, in terms of recommending to investors, we have been talking about this state elections potentially improving the sentiment among market participants towards election outcome in May 14, and that's what it's turned out to be in terms of coming ahead of expectations versus market what investors are looking at. How they should position for this, both near term and longer term. And from a near-term perspective, obviously, this sentiment positive will take markets a bit higher. How much is debatable. From a medium-term perspective, there are two ways to look at it. One is May 14 election is still some time away, and the political noise can get volatile. But from a medium-term perspective, what's interesting for us from yesterday's state election results is the reaction by the current Congress leadership also when they talked about inflation as a potential reason for their loss. And this is against the general stance of social welfare spending, even at the cost of fiscal indiscipline historically. So that's a big positive if I look at it from a medium-term perspective for India, because that change in stance from the current incumbent government with much more political backing towards getting inflation under control, that I think is the key for getting India's economic imbalance right over the medium term. And that's something which the market anyway ascribes to a more market-friendly BJP government potentially. So this change in approach on the policy side, a policy stance, could be a big positive over the medium term. So the signs are positive from a medium-term perspective. It's a question of at what levels you buy, what you play for, and we try to get some sense of where the Nifty could trade at next year. In case a more favorable election outcome comes in, we see a mild economic recovery, market re-rates a bit, and we come up with a number of around 6,900 for next year. And that's what our Nifty target is. So at what levels you buy to make your returns attractive, if you keep 6,900 levels as a target for next year, that's a call to be made. So at 6,100, 6,200 possibly yes. If the market continues to rally over the next couple of days, then the risk reward of buying incrementally will get less and less attractive.
Gautam, so what happens from now up until May 2014 when the general elections outcome would be declared? I mean, do we see the market being range bound? Because there will be a lot of news flow. We'll see some clarity emerge and tapering and, a lock by way of the election movement as well. Will we see the ceiling of the market, or rather the roof of the market, go a little bit higher from what we're already sitting at? And do you think the market would be able to then defend a 6,000 floor?
Ceiling will definitely go higher because India, even over the last 3-4 years, we talk about all-time high and all that, but earnings have been growing every year. So if the all-time high reached after 5 years, it's a clear case of derating to some extent. So ceiling will go up higher because even last 2 years earnings have been growing. In terms of what factors will drive market and the market should be range bound, so I still don't see the market going out of range in terms of re-rating back to 16 times, 18 times PE multiples in a hurry. That scenario still looks a bit premature. We need to see more credible policy measures, more credible economic data points rather than just a cyclical upswing. Having said that, keeping in mind the tapering, so we have never been really worried around tapering causing any major damage to India in terms of a currency crisis or anything. But yes, that still remains a factor. But in India's case specifically, I think the local political noise will play the bigger role over the next few months versus tapering in terms of market direction. And when we say political noise, again, part of the election outcome which we saw yesterday was building up a more positive sentiment towards Modi-led BJP. But we have to remember that the political arithmetic still remains challenging. And the third front, or the various constituents of the non-Congress, non-BJP parties, that still remains a dominant force. So whether it will be a Modi-led BJP or it will be a third front kind of a dispensation can have different outcomes in market, because if it's a third front dispensation, that's not necessarily a positive scenario for markets. So it's not an obvious slam dunk in that sense. So absolute Nifty levels at which you build your risk positions, at which you see your risk reward, that remains critical. And we have been saying that's more sub 6,000 levels in terms of building positive risk reward positions, possibly even 57, 5800 levels. So at 6400, at 6500 levels to build or add new positions, to us the risk reward is not necessarily attractive from a 6 to 12 month perspective. But we are not in the believers in the camp that market goes down sharply because of tapering or other issues from here on.
Gautam, where would you like to draw a line for cyclicals? Cyclicals are up 15, 20, 25, even 30%. Do you think now it's time to take some chips off the table for those who bought stocks like L&T, Crompton Greaves at low levels? Are they better off cashing out?
I would think so on a top-down perspective, that it's time to take some profits off the table. And again, you have to be slightly specific in terms of sectors as well as stocks. So sector-wise, we still are comfortable with having private banks among cyclicals as an overweight. We're still comfortable having power utilities like power grid, etc. To have as an overweight. But more leveraged names where there are issues on balance sheet, or there is lack of visibility in terms of order flow or earnings momentum, then obviously if they've run up, then maybe it's time to take some profits off the table.